Good afternoon, everyone, and welcome to Strategy and Stock Picks for the second quarter of 2023. I'm Rashan Gidwani, PhillipCapital's media host and presenter, and I will be your host for today. Today's session is on the Malaysia market, and you may take a look at the agenda stated here. We still have some time before the webinar begins, so just sit back, relax, and our speakers will begin shortly. Hi, just a gentle reminder that we will be taking in questions from the Q&A tab during the Q&A session later. Do raise any questions you have over there. You may also upvote other participants' questions. Questions with the highest number of votes will be picked earlier by our speakers. We will flash our ongoing promotions while waiting for the speakers to get ready. You may scan the QR code to find out more about the promotions. For more information about these promotions, please visit our website under the promotion tab. Without further ado, let's start the webinar. For this session, we have Nurul, Farhana, Binti, Noor, Saidi, strategist from Phillip Research Sdn Bhd, to share the Malaysia market outlook and update on the retabling of the budget 2023. And our analyst, Thong Jun, would cover counters including Gamuda Bhd and Lagenda Properties Bhd. Let us welcome them.
All right, thank you, Ms. Roshan, for that warm welcome. So yeah, good afternoon, everyone. So before anything, let me share my screen first on the slide. Okay, so as Roshan has already mentioned just now, my main topics today is going to be on market outlook for, essentially it's going to be, I'll talk a bit on the global market outlook, then touch it back to Malaysia, and also sort of like give you some updates on the budget retabling that we just had back on 24th of February. Then afterward, Jun, our Malaysia construction and also property analyst, would follow up on the company stock pick that he has essentially. So my topic for today, essentially the topic for today, for market outlook today, is going to be on first half of the year. It seems to be on site, but we still think that the second half of the year is still going to be still cloudy at the moment. So before we begin, give me a second. Okay, essentially, first thing first, we need to address on the disclaimer so that everybody is on the same page. So as usual, this presentation is not being reviewed by the Security Commission Malaysia, and it's provided to you for general information only. So while all reasonable care has been taken in preparing of this, opinion and projection and any opinion that expressed herein essentially are subjected to change without notice. So once everybody is on the same page on that, so essentially I can start my presentation now. So during my last session, I did talk about the acronym for this year, right? Since it's the year of rabbit, so I didn't make much. I didn't make changes of the acronym, so I still stick to the notion for each of the characters, right? But there is some update that I would probably provide it now. So essentially, R stands for rotation, where we start to see funds rotate among the countries where there is a shift of risk premium, which I will talk more more later. And then A stands for ANWA. Essentially, it's going to be more towards the unity government policy, where one of the, I won't say risk, but then we do keep in mind that there is a state election that's supposed to be happening by end of this year essentially, but the rumors right now is that it's going to happen on July essentially. Then B stand for burst, where it's actually we're referring to a black swan event where more solar activities, sort of like on a different note of what we usually hear when it comes to market, right? Is that this is a natural phenomenon where the sun activity, essentially the burst of the sun activity peak at every 11 years essentially. So now seems to be that the sun activity start to peaking again. And one of the side effects of this is that it would cause some disruption when it comes to radio wave, radio waves. So especially for those with a radio signal below 30 megahertz essentially. So that may potentially cause a severe shockwave radio transmission disruption towards most of the Southeast Asia region, particularly sort of like Southeast Asia, Australia, and also New Zealand. So that's why we call it as a black swan event, because at the end of the day, the space weather sort of like space weather still continue to be very unpredictable. But then if it were to happen, so to a certain degree, we do keep an eye on this update essentially, because at the end of the day, if it does lead to some radio blackout, there is some, that's why to a certain degree, we would say that it's positive for the technology counters as well, because essentially all these radio wave essentially need to be replaced sort of like immediately as well. So the next acronym is on B, on blockchain. So last time we just purely focused on crypto and also NFT crisis, but then at the same time, I know that the B can also change to be to name as a bank as well, because we know I think everyone sort of like aware that starting early of March, there are quite a number of banking turmoil that it has been occurring, but then at the same time it does ease off a lot of the sentiment around that or at the same time the turmoil, right? To a certain degree, it has eased off quite a lot since then as well. So, but then at the same time, it does shows that for sort of like serve as a reminder to all the investors as well, when it got, even for a stable coin also, it's not so stable at the same time. So the next one is inflation. So this one is still a big question mark at the moment, because at the end of the day, unexpected. We know that the Fed monetary policy do cause sort of like a huge movement when it comes to stock markets, right? So the question now is still how high is high when it comes to interest rate, and also the at the same time, when is the pivot timing is gonna happen? So that is where everyone is still in dilemma at the moment. Then the last word is essentially T, stands for tension, where this is sort of like still ongoing. We still hear on and off. There's a US-China tension when it comes to the technology side. Sometimes it's on, sometimes it's off. So that one's still ongoing. Then even on the North and South Korean side also, it's sort of like on and off as well. Then when it comes to the Russian and Ukraine war situations, right? Although we do note that the whole situation to a certain degree right now, it seems to be quite quiet at the moment, but we do take note that there are some what you call it, since 24th of February since 24th of February this year, right? That since it has marked 1 year of anniversary of the invasion of the Ukraine by Russia. So thankfully, at that point of time, the heightened situation or even the worst case scenario doesn't happen. So we were thankful for that. However, we do still remain cautious, as we believe that when it comes to the war situation between these two countries, right, is still far from over, and any development of the Ukraine situation at the moment, Ukraine situation may continue to nudge investors to continue to seek gold investment as its safe haven characteristics. So that's why for now we have been monitoring the Russia-Ukraine situation based on gold prices, based on gold price, as you can see here. So next one. Yeah, so technically next, once I put them on the side, it's more talks about how we want to navigate the whole economic storm at the moment. So what IMF has said, although this data, right, essentially it's a bit outdated, but then if we remember clearly, the beginning of the year, everyone's sort of like very positive when it comes to the market, when it comes to the economic side, where we are looking into a very, very, not to say very, but that is a strong economy for this year. So that's why IMF has been doing did a lot of revision up during their January forecast number. However, like I said, this is not updated because in comparison to that, when it comes to if we just sort of like zoom into the US alone, right? For this year, they are expecting for 1.4% growth for this year, and also for next year. Essentially, they're looking at for 1% growth, GDP growth, right? But then if we look into what Fed has updated to us during their FOMC March meeting, essentially it shows that they actually revised down the GDP number for this year and also next year. So essentially it's much lower than what IMF is expecting for, even for 2023, they're looking for only 4.4% growth for this year. And then next year, essentially they revised it down to 1.2% from 1.6%, and much more sort of like concerning is actually if we highlighted looking into the inflation number, which is one of the sort of like, to a certain degree, we can call it as an main objective of Fed at the moment, where they keep on saying that their fight against inflation is still far from over, and also they still want to bring inflation back to the 2% levels, right? So this is where the number essentially come from. So what they have done back in during the FOMC March is essentially upgraded the inflation number for 2023, essentially from 3.1% to 3.3%, and then even for core inflation as well, they also revised it up from 3.5 to 3.6%. So this actually denotes that the inflation, the Fed doesn't think that the inflation, their battle against inflationary pressure is still far from over. Then they would still continue to maintain their tightening monetary policy stance at the moment, since they do keep on since they're expecting for inflations to stay elevated at the moment. So that's why even for Fed fund rate projection for next year, although this year sort of like it's maintained at 5.1%, but for next year essentially they are revising up to 4.3% from 4.1% previously. So when we talked about inflation, right? So that's why during my last presentation, essentially our view is that from I think from September last year, we were expecting for the sticky inflation essentially to start to peak around December. It does come to a point where it did seem to be peaking, but then at the same time it does stays elevated at above 6% at the moment. So this sticky price consumer index here is essentially calculated from a subset of goods and services that includes the CP, the inflation number that changed relatively infrequently. So these goods thought to incorporated in expectation about future inflation to a greater degree than prices that change on a more frequent basis, like the flexible CPI essentially. So from here, right, we still think that although it seems to be peaking, but then at the same time, it's still far from 2% from the Fed 2% target. So that's why we think that when it comes to Fed monetary policy paths, they still holding firm on their view that they're gonna keep interest rate elevated at the moment. So during the latest dot plot, essentially it shows that even with the turmoil that happened on the US banking side, they still holding firm ground on their US on their objective, and essentially keep what you call it. So despite market has been anticipating for actually a rate cut for Fed to actually counter the slowdown in the economy, and also sort of like for Fed to essentially help on the banking side. But then when it comes to Fed, what you call it, notion at that point of time, essentially they put it separated in terms of the targeted what you call it. They keep it separated in terms of their targeted sort of like rescue to the banking sector compared to their main general target when it comes to their fight against the inflation. So that's why they keep a very firm rooting when it comes to that. So even for the past few days, essentially, there's a few Fed officials has come out and still maintain their aggressive, not to say aggressive, but actually it's more of they still hold firm when it comes to their hawkish view and still continue to maintain their talk about fighting against inflation rather than talk about all the other turmoils that has been happening in the market essentially. So how about Malaysia? So when it comes to Malaysia, right, the GDP growth that we've seen last year is actually extraordinary at 8.7%. However, for this year, we do expect when the GDP to actually come down lower at slightly lower rate at 4.5%, because essentially we still think that mainly because of the what you call it, the higher base effect essentially. So the growth will continue to be driven from the expansion in the consumer and also tourism related sectors, while export oriented sectors are expected to be moderated this year due to sort of like in line with the slower global growth momentum as well. So last year, if you remember, right, when it comes to the export side, right, it does continue to show two consecutive year of double-digit growth expansion. So that actually sort of like boosts our Malaysia GDP growth. But then for this year, essentially, we don't see that happening. So that export portion is going to be moderated. So would be moderated. So that's why to a certain degree, the real GDP growth is moderating to 4 to 5% as well. So and then when it comes to inflation level, sorry, before I talk about inflation, that part of the another part of the when it comes to the GDP growth as well, the public investment is also sort of like expected to expand by 7% this year compared to 5.3% back in 2022, which attribute to a higher capital spending by both general government and also public corporation, which there are quite a number of continued progress of large scale infrastructure projects such as the East Coast Railway link and also LRT3 project and also Pan-Borneo Highway. Then when it comes to the budget deficit, essentially it does shows that for 2022 it narrowed more than expected to 5.6% compared to targeted of 6% last year, thanks to the 8.7% GDP growth essentially. So that brings it well above the projection of 6.5 to 7% that was tabled back during the budget 2022. So thus, riding along the stronger than expected economy from last year, ANWA is actually expecting for the budget deficit to continue to further down to 5%, which we actually employed it into our target for this year as well. So despite his ambitious spending for this year, then when it comes to the OPR rate, right, earlier this year, BNM has already surprised us with a 25 base rate hike during their most recent meeting. But then when it comes to their future monetary policies, right, essentially BNM are trading it more cautiously as it aims to provide overshooting or undershooting on its delivery when it comes to the OPR rate especially on the next monetary meeting. So to put it plainly, overshooting here means that raising OPR rate too quickly and undershoot it means that raising rates too slowly. So because at the end of the day, when it comes to all these kind of like monetary policy, right, it does take a long time. So there is some time lag between the monetary policy stance to actually have an actual impact to the economy. So for the Malaysia case, it does take at least 4 quarters for 4 to sort of like 2 years to actually see the impact on inflation. So that's why for inflation rate at the moment, we still expect it to be elevated at around 2.8% to 3.8% essentially. Then when it comes to exchange rate, this one to a certain degree is anybody guess at the moment is sort of like the year-end exchange rate for USD to Malaysia ringgit. So for here, we have a technical view that by year-end, our target for the exchange rate between US dollar to Malaysia ringgit, we're looking at 420 based on technical analysis essentially. So yeah, when it comes to retabling of the budgets, right? So the budget 2023 does unveil a record of 386.1 billion ringgit, stripping off sort of like way higher than the previous government has tabled at 372.3 billion that was tabled back on October 2022. And the budget theme this round is going to be on Membangun Malaysia Madani, guided by the Madani policy framework, which allocated 75% of its into operating expenditure, and the remaining 25% essentially is going to be on development expenditure for 2023. So in addition to this, similar to the previous government, the unity government will not extend the prosperity tax on windfall profit that was introduced back in 2022, now revive the border GST, which was placed back in 2018 with the current sales and service tax. Instead, it does announce the personal income tax cut of 2% for several brackets of for those who have an income from 35,000 to 100,000 per year at the rate of 0.5 to 2%, 35 tax cut of 2% for those with an income 35,000 to 100,000 per year. But then when it comes to those who are earning more than 100,000 to 1 million, essentially they do receive a increase in tax at rate of 0.5 to 2%, depending on which bracket you are. Then at the same time, the tax rate for micro, small, and medium enterprise for the first 150,000 is taxable income will also be reduced from 17% to 15%. To 15%. So the government essentially will continue to remain steadfast in balancing the need of safeguarding the well-being of the public and also the nation, while ensuring a sound and sustainable fiscal position essentially. So that's why, to a certain degree, we know the operating expenditure this round, it does shows that it is expected to decrease by about 1% from previous year, which is understandable when we look at the 2022 government sort of like operating expenditures, right? Most of it is actually double up because of the social assistance and also subsidy, which accounts about 5.2% from budget 2022, when sort of like at that point of time, there is a conduit coming from, sorry, not conduit, there is sort of like social assistance coming in from the general election, and then at the same time, there is still the COVID-19 fund, which essentially make up about 3% of the budget of 2020. Sorry, which make up around 7% of budget 2022 essentially. But then when it comes to this year allocation, these two allocation has been reduced significantly when it comes to COVID-19 fund. Essentially, you don't even see it on the charts here essentially. So under this spending, right, essentially the allocation is more going to be towards the economic growth for, let's say, for mainly on the construction side and also on manufacturing sector essentially. So when it comes to other sector like agriculture and mining, they are expecting for at least sort of like growth of about 1% each, while since it still remain below the pre-pandemic level as of 2022, but then it does expect to grow even further in line with the improvement in the economic activity, especially for this year onwards. Okay, so when it comes to the Malaysia government bond schedules, right, there are some concern when it comes to the interest payment. So if we have a look here, essentially it does shows that from here, we actually compile the interest annual payment as of February 2022. It does appear that it is peaking on 2024, which then will continue to taper down all the way down to 2052. So one of the main concern previously, I think it's still one of the talk about government bond essentially is 1MDB bond, where at that point of time, as of end of February 2023, there is still a total outstanding debt of about 18 billion, which 18.2 billion, which is expected to go down to continue to be reduced all the way down to 2 billion using the asset recovery trust, utilizing the fund from the asset recovery trust fund. So moving onward from there, essentially the 1MDB impact would be minimal. Will be minimalized essentially. So while there are being some concern when it comes to there are the concern of the government debts, right? So we still believe that it's still manageable at the moment, because at the end of the day, it's still about 60% of GDP as at end of 2022, which is way below the statutory limit of 65%. So and then at the same time, when it comes to all these debt exposures, right, more than 97% of these debt are sourced domestically, so that minimize the exposure of the foreign exchange rates essentially. Okay, so as I mentioned earlier, right, when it comes to the budget, essentially, although sort of like we know that the general elections has already been over, but then the budget that was retabled back on February is still seen as an election budget, because the 6th state in Malaysia is expected to hit for ballot in July. The rumors is July, but then there's no specific date that has been announced yet. Since but then at the end of the day, for the state election to take place, it does need to take place before December of this year. So this result of this vote would have a huge impact on the stability of Anwar's unity government, as the current so-called unity government are caught together right after the election result in Malaysia's first ever hung parliament. Then at the same time here, I also put in a few other countries' election that sort of like, especially towards US presidential election for next year, because at the end of the day, there are some talks about US presidential election play that's going on the US side at the moment as well. Okay, so now once we pass through the equity side, so now we move on into the equity market. So this is sort of like, it's not exhaustive, but then these are the things that I think has been sort of like at the forefront when it comes to things that has been moving the market essentially. So any talks about US fight or the US Fed and also inflation would move the market. Then banking sector to a certain degree, although it has eased off, but then I do think that there are some what you call it, sort of like jittery, some investors that probably still going to be jittery when it comes to any bad news highlighted coming from the banking sector. So that's why at the moment everyone is sort of like still try to analyze the whole impact of the whole impact of the spillover coming from the US side and even on the Credit Suisse side essentially. Then when it comes to the China, right, recently he continued to manage to reaffirm his powers. So we know that he will continue to continue to play his role as the forever I would say forever kings to a certain degree, because we know that he do want to maintain his power, and also he wants to continue to make China is great again to a certain degree. So that's why as long as Xi Jinping stays in power, I think that when it comes to China, the policies and everything will still be very favorable when it comes to the economic growth to a certain degree. Then the last one is going to be on prolonged Ukraine-Russia war, because at moment, like I showed in the graph of the gold graph just now, it does shows that gold prices does move along at any updates on the Ukraine-Russia war. But at the same time, one of the biggest concern of Ukraine-Russia war is actually on the impact of it that it has on the commodity prices essentially. So that's why all of this still to a certain degree is still at the top of investor mind when it comes to navigating the market. But then at the same time, when we look into like purely on the US market, right, it does tend to be less speculative at the moment, because if you look into the charts here on the S&P 500 commodity and also asset, it does move more or less in tandem. And then at the same time, we also note that when it comes to the margin trade, it continues to shrink and making the broader market less speculative and less volatile as well. But then at the same time, we know that when it comes to US markets, right, there is still liquidity in the market. And then one of the thing that everyone is sort of like concerns about during the FOMC March meeting is essentially if Fed would make any changes on their quantitative tightening movement essentially, but they don't. So they still keep holding their bond holding cut of shrinking by 95 billion. But then when it comes to their help to the new liquidity program, that is kept separated as a targeted effort. However, so here we do know that there are signs of raising stress in the market thanks to the recent bank turmoil. But then at the same time, we do note that after the recent bank turmoil, it does start to taper down again. Sorry. Then if you look into the disaster index, which comprises of the inflation and also unemployment data, right, it does show this chart is the disaster index is essentially inverted, so it shows the inverted relationship with the S&P 500 much clearly here. So it does shows that it has already been bottoming essentially. Okay. So now we move on into the volatility of market. So essentially here we have MOVE and also VIX index. VIX is essentially referring to the equity market, and MOVE essentially refers to the bond market. So if you look at here, the tandem or the movement of volatility when it comes to bond, especially during the whole banking turmoil, right, it does effect on the bond market much more than the equity market. So to a certain degree, it does seems like equity market at the moment is still being traded at a very manageable still manageable volatility levels compared to the bond market, where it's essentially continue on the rise. So that begs to the questions, right? If volatility continue to be volatile, so where do the market essentially stand? So I think this one we have been mentioning since earlier, where we do look at the revaluation when it comes to the markets. So at the moment, if we closely monitor the valuation of the markets, right, it does shows that compared to the period of the COVID period back in 2020. Sort of like 2022 all the way to 2021, it does traded at a very high premium, but then at the moment it does traded at the level of 16, sort of like towards 18 to 16 to 20 times multiple. So that's why to a certain degree we do think that there is re-rating of market is underway essentially. So that also applies similarly to the Nasdaq market, where essentially just now S&P 500 is show more of a broader market, but then when it comes to Nasdaq, it shows more targeted towards the technology and so growth counters. So same thing, it does show that there are some possible re-rating happening where it probably going to be trading at a level of 25 to 30 times multiple compared to the high of 40 times during the pandemic period. So why I mentioned that on the US market, essentially the valuation there essentially shows that when it comes to relationship between the US and also Malaysia market, especially on here where we show the correlation between S&P 500 and also KLCI, it does show that there is still positive correlation essentially at 55% if we take it from all the way from the dot-com bubble before the dot-com bubble period. But then if we take even on the shorter period, right, the correlation is actually getting higher at 66%. So given all this, right, it does give us a good time to actually revisit for the equity risk premium. So like I said on the acronym just now on the letter R, right, rotation stand for rotation, where we think that there is a shift on the risk premium. So here what we has observed is that from the standpoint of view of a US investor, the risk premium compared to from US investor to other markets is essentially rising. The spread is essentially continue to rise. So from a US investor perspective, Europe, Japan, Hong Kong, and also Singapore does provide a better a good compensation based compared to the historical risk premium compared to the historical risk premium essentially at the moment. However, when it comes to Malaysia, it's still very low at 1.93% compared to the historical of 5%. But that we do think that this condition would continue to improve, which I would actually mention more later on. So when we talk about risk premium, right, since Fed has continuously to increase interest rates, so what that does is that the yield continue to rise on the US side. So risk premium essentially for the US market has continued to be shrinking. So that actually brings on comparison to when it comes to Malaysia market, we don't have interest rate high as aggressive as what being experienced in the US market. And then at the same time, when it comes to our equity market as well, there is some upgrading in terms of earnings as well. Upgrading of about 6% into our consensus earnings. So that actually shows that the risk premium at the moment seems to be stabilizing and also continue to be rising. So that actually brings up hope for us. So essentially, if we look into a KLCI relationship with the equity risk premium, that we were hoping that as the equity risk premium compared to the US investor risk premium compared to the Malaysian market, as it continues to improve, that would actually brings more foreign fund flow into Malaysia. However, if we look into the charts here, it doesn't seem to be showing that relationship at the moment, because for here, we think that to a certain degree, it's like a special case situation, because from our view is that if we remember for the past 1 year, essentially even for US investors, right, they do face quite a number of uncertainty when it comes to their own home ground, sort of like US monetary policies. So that's why to a certain degree, every single time there's bad sentiment or bad news coming from, especially if they underestimate what Fed will be doing. So essentially all this money continue to rush out of Malaysia. So rush out of Malaysia essentially. So that is what we have been experiencing since last year and even this year as well. But then since the Fed, I think to a certain degree, investors has already been accepting that the Fed will probably gonna continue to be very firm when it comes to their fight against inflation. So to a certain degree, the risks on that would essentially translate to, when it comes to the probability of rate hike for May, essentially earlier of the year, essentially, like before the whole banking turmoil happening, there are some talks that the peak of interest rate for this year is going to go as high as 6%. But then now that has actually been wiped off, and everyone sort of like talk about the normal rate of 5% in line with what Fed is already guiding essentially. So that's why when it comes to the scenario for this year, that's why initially I mentioned that the second half will still be cloudy, because among all these scenarios, right, earlier of the year we do hold number one, the disinflation and strong economy as our base case scenario. But then at the moment we don't think that the strong economy is gonna hold, because so we think that the third scenario is gonna be more likely. So that's why for S&P 500 it's probably going to be trading about the year-end S&P 500 is going to be at around 3,000 to 3,500, whereas for KLCI is going to be at 1433 and for 1552 levels. So this is actually in line with our year-end target here, as you can see, where the base case scenario that we have for our year-end target is at 1525 at 14 times multiples essentially. But then at the same time, we do have to remember that whenever there's any correction, sharp correction when it comes to US market, as I mentioned earlier, that there are quite a significant positive correlation between US and Malaysia markets. So whenever US needs, Malaysia also would follows essentially. So like, let's say if the market sneeze for US market drop down about 30%, so we are expecting based on the correlation alone, essentially 30% down would means about 13% drop on KLCI essentially. So yeah, probably skip this one first because I'm running out of time. Okay, so all in all, right, from reference to our 2023 outlook report, we do advocate markets, because at the end of the day, when it comes to market turmoil, because at the moment it seems like there's so much thing happening at the moment, and everything do run quite fast-paced to a certain degree. So that's why on our 2023 market outlook report, we essentially advocate investors to look into the barbell strategy for when people reassess their risk tolerance, especially for 2023. Sort of like how to navigate through 2023. So this strategy essentially tells you to invest in two extreme of high risk and low risk asset while avoiding the middle road choices. So from this point, essentially we take low risk as a big cap and also dividend yield stock. Then when it comes to the high risk stock, essentially it refers to the mid and small cap companies and also growth companies essentially. So from there, we took a technical analysis on the barbell strategy. So we conduct quantitative screening and technical analysis. So highlight companies that have a buy and also outperform rating, as you can see on this table here. Okay. Then last one, probably I'm going to touch is on some of the sectors that we do think we do have a positive view from after the budget 2023 tabling. So one of it is definitely going to be in consumer, because as I mentioned earlier, that the budget seems to be an election budget as well. So and then at the same time, there are quite a number of goodies that is being presented to rakyat as well during the retabling. So that's why we see positive on consumer after the retabling of budget 2023. Then healthcare also, we do think that it's going to be positive since there is a substantial increase in allocation this year. So and then at the same time, there is an additional incentive allocated to appoint more health workers as well. So that will bode well for the healthcare sectors. Then lastly, technology. This one definitely will be positive, because at the end of the day, there's going to be ongoing favorable incentives to promote automation, digitalization, and as the government intend to remain competitive alongside the industry 4.0 transformation. So yeah, the next one is going to be construction. So this one I'll pass to my analyst, Kejun.
All right, thank you, Anna. So I'll be taking over to talk about why we are positive on the construction sector. So similar to the budget that was tabled under the previous government, there's a wide range of basic development projects, which are namely schools, hospitals in less developed states, particularly in Sabah and Sarawak. And this provides all these basic development projects. They provide small pocket projects that generate quick turnaround for all these local contractors, and also that MRT3 was also announced in this budget, but at a lower allocation of 45 billion ringgit, which is about 10% lower as compared to the original plan. As such, contractors can expect a slightly lower contract value for each of the civil packages. But nevertheless, we still view this as a positive news, as it would replenish the order book of the local contractors and bring in some vibrant activities. But after all, the issue of compressed margins of all these contractors were not addressed in the budget. And that, coupled with the higher electricity tariffs that was revealed back in January this year, is going to further compress contractors' margins, and which essentially just force the contractors to have to mitigate it by themselves. That's one of the drawback of it. And next, now I'll talk about some of the fundamental stock picks that I have. And the first stock would be Gamuda Berhad. I believe some of the investors here today are actually quite familiar with Gamuda already. So, but for the benefits of those who might have not heard Gamuda before, I'll briefly go through some of its business operations and some of the projects that they have. So, Gamuda's core business mainly revolves around engineering and construction, and also property development. And for its engineering and construction division, it basically has infrastructure projects well spread across Malaysia, Australia, Singapore, and Taiwan. And as you can see from all these historical and ongoing projects that Gamuda has, it's not that hard to guess that Gamuda's core capabilities is actually in tunneling and track infrastructure. And currently, majority of Gamuda's projects actually come from its Australia division, which contribute around 59.3% of its current order book, while Malaysia only takes up around 16% of their current order book, mainly due to the completion of MRT2 and also lack of infrastructure projects in Malaysia in the past few years. But after all, we are still expecting some new wins for them in this year, especially with MRT being the most likely win that they'll be securing this year. And next slide. Similarly, Gamuda also has its property development presence well spread across several countries, which are Malaysia, Vietnam, Singapore, and Australia as well. And as shown in the photos that I've attached in the slide, Gamuda's larger scale property developments are mainly at Malaysia and Vietnam. And these larger scale projects would also be the key revenue driver for the group in the next few years as well. And next slide. Now we take a quick glance at the earnings trend of Gamuda. So in the past 10 years, the revenue growth of Gamuda has been relatively stable with a compounded annual growth rate of 9.1%, but there's a significant drop in COVID years of 2020 and 2021. But as the economy opened up in 2022, the group managed to recover from the impact, and not only recovered, they actually achieved an all-time high revenue of 4.9 billion, which can be greatly attributed to the pickup in progress of its construction, and also as well as increased revenue contribution from its property division, where it achieved more than 4 billion pre-sales in 2022 alone. But now we take a look at the shaded areas where it is the forecasted numbers and how we foresee Gamuda to continue to perform in the next few years. We're expecting the margins to normalize within the similar level of 2022 for the near term, mainly due to building materials price still remain elevated as a result of higher commercial electricity rate in Malaysia. But nevertheless, we still foresee very substantial revenue growth in the next few years, mainly driven by some of the growth initiatives that Gamuda has been implementing to grow its core businesses, and I will be talking about it more in the next few slides. Next. So I'll briefly go through some of the growth strategies. I'll briefly just list down some of the growth strategies that they have, and then I'll go into details later. So the first one will be the acquisition of an additional construction arm in its Australia business. And the main intention for them doing this is to take on more mega projects from the Sydney Metro West and Suburban Rail Loop network. Then for its property development division, Gamuda is actively seeking for quick turnaround projects, or in short, we call it QTPs, that essentially are projects that have relatively attractive rate of return and while requiring a shorter investment time frame of less than 5 years only. Besides growing its core businesses, Gamuda is also actively looking for opportunities to diversify into the renewable energy segment, where its involvement is likely to be within solar and hydro power generation. And the first investment that Gamuda did in this segment is to acquire a 30% stake in EIS Energy, which is a solar EPCC company that should serve as an enabler for Gamuda to kickstart its renewable energy portfolio. But as of now, I don't see any immediate growth coming from this segment yet, as they are still searching around in the market for more opportunities in this segment. So I won't go into too much details about this segment yet. So next slide. Now I'll jump back to talk about the growth strategy for Gamuda to grow its construction division. So basically, they have announced that they will be acquiring an additional construction arm in Australia, which is Downer Transport Projects, or in short, we call it DTP. So why they want to get DTP? This has very much to do with DTP's core capabilities in track infrastructure, stations, train signaling, communications, and system integration, and all these that are listed down there. But all of which, essentially, all these are what Gamuda has been doing in Malaysia, and they have been trying to gradually replicate it to its Australia business. And by taking over DTP, this acquisition basically allows them to immediately replicate such the capabilities to its Australia business division, and also acquire the outstanding order book that is worth 2 billion Australian dollar that DTP currently has, and which would essentially convert to around 6 billion Malaysia ringgit order book when the deal completes in June this year. And now, when we look at the potential synergy coming from this acquisition, we have to understand how before this acquisition, Gamuda's Australia business division, which is Gamuda Engineering Australia, have been undertaking some mega projects such as Sydney Metro West with some of the local tier 1 contractors, which is required for them to take on all these mega projects. But with this newly acquired construction arm, Gamuda can use Gamuda Engineering Australia and this newly acquired construction arm to joint venture each other to take on all these mega projects. And with that, they can have full control in all these projects and better profit from it. And with that, essentially translate to more than 30 over billion ringgit new wins in 2024 and 2025. And next. Now I'll talk a bit about one of the recent acquisition of Winchester House, London, as part of his efforts to build its quick turnaround projects portfolio. So currently, Winchester House is the current office for Deutsche Bank's headquarters in UK, but the lease agreement is set to expire in April 2024. And as the lease expires, Gamuda and its joint venture partner, Castle Forge, actually plan to refurbish this building into a state-of-the-art sustainable office in the City of London. And what does it mean by sustainable office? This basically means that they want to ensure this refurbished building will be rated outstanding based on BREEAM rating. And BREEAM rating basically is one of the ESG ratings for office buildings in UK. And buildings with this outstanding BREEAM rating tend to be the most sought upon office for multinational corporations that have corporate ESG mandates, and also planning to better retain talents, as most of us are returning to office after years of working from home. And since Gamuda's intention in this investment is for quick turnaround, so Gamuda will actually be selling this building after it has secured a strong pre-lease arrangements with one of the MNCs, so that it can fetch a higher price in the market, hence higher rate of return for Gamuda. Well, this is not the only quick turnaround project for Gamuda, but this gives a rough sense of what they'll be doing for what does it mean for quick turnaround projects. and they'll be actively seeking for deals that are similar to this. And next slide. Yeah, I believe this slide is most investors would be interested in. So basically, with all that, we have a buy rating on Gamuda with the target price at 5.97 ringgit, which is based on the 11.23 times forward PE of its 2024 estimated EPS of 53 cents, which in this earnings, we have already taken into consideration the potential earnings coming from its Australia construction arm acquisition, and also some potential earnings from MRT3, but it's likely to be minimal due to it being the early phase. And while the potential earnings from the Winchester House refurbishment is likely to be realized in 2026 and 2027, so it doesn't affect our valuation at the current moment. And now let's move on to the next stock. So the next stock is Lagenda Properties Berhad. So Lagenda is previous slide first. Okay, Lagenda is essentially a pure play affordable housing developer that develop townships that have thousands of single story landed house. As you can see from the photo in the background, where it's a huge township with thousands of single story landed house. And all of these are sold within the affordable price range of 300,000 and below. And some of the investors may be skeptical about whether Malaysia property market is performing or whether affordable housing has demand in Malaysia. So I've actually compiled some property data from Malaysia 2022 property market report in the next slide. Okay, so in 2022, the residential transaction volume actually recorded a 22.3% increase, recording higher sales volume than the pre-pandemic years of 2018 and 2019. That essentially just show that Malaysia property market greatly recovered from the impact of COVID. And also, when you take a look at the right side, the pie chart, property within the affordable price range, which in this case is those that are 300,000 and below, emerged as a main driver for property market in 2022 by contributing more than 56% of the residential property transaction, which also just signifies the strong demand for affordable housing in Malaysia. Okay, next. Now we'll jump back to look at Lagenda itself. So Lagenda's business model mainly revolves around these two aspects of economies of scale and operational efficiency, which basically can be summed up by looking at the previous background photo that I have, where they have all these all the townships have mass volume of units of more than 1,000 units, and coupled with that, they actually implement the same housing design all across its township in different states. So basically, it's the same single story terrace house with the same design and layout. With that, they can enjoy a lot of cost saving and efficiency, and also saving in legal costs, where they can just use the same layout to get approval in different townships. Another key aspect of their business model is that they overemphasize efficient land planning, where they essentially just keep their land bank as lean as possible and only acquire land when they need it for development, and always ensuring the land that they got can be converted into township as quickly as possible. And next. With that business model, Lagenda is able to sell its property at a very competitive price as shown in the graph. And this graph is taken from how they penetrated the housing market in Perak, where they're able to price their houses at the price range that fall right in between the maximum affordability of B40 and well within the affordability of the M40 income group of Perak itself, the state itself. Not only that, the average selling price of its housing are also below the average home price of Perak, as you can see from the graph, which is at 249,000. The average selling price of its project in Perak is at 194,000. That is essentially how they capture strong take-up rate for its development to achieve its plan of quick turnaround. And next. And with the strategy of pricing their property development to address the affordability of the B40 and M40 income group, they actually managed to grow their revenue and earnings even during COVID years. That just shows the resilient demand for its houses, and also how its houses actually serve as necessities for this lower income group. Moving forward, we believe that Lagenda will be able to sustain this similar growth momentum in the next few years, but it will be at a lower margins, mainly due to its multi-states expansion plan, which I will talk about in the next slide. So initially, Lagenda property developments are mainly in Perak, which is also where they have the strongest reputation. And some of the key townships in Perak that they have in Perak are Lagenda Bandar Baru Setiawan Perdana, or BBSAP, as you can see in the map there, and also Lagenda Teluk Intan, which is LTI. Then only in 2022, they started to venture into other states to kickstart their multi-states expansion. And the first state that they expanded outside of Perak is actually Kedah. And for them to penetrate this new territory, they actually joint venture with one of the local developer to leverage on its partners' regulatory position and reputation to ensure the success of the project. But then the downside of such a joint venture is that it will limit the economies of scale that Lagenda is able to achieve as compared to its townships in Perak, which essentially will result in lower margins from all these joint venture projects. But such sacrifice is much needed for them to quickly grow its presence into other states. And once they have built a strong reputation in these states, Lagenda will eventually develop larger scale projects of its own in all these states later on, so that they can achieve back the margins that they have been getting from the Perak townships. Moving forward, they're looking to expand to more states such as Johor, Pahang, and Selangor in the next few years as well. With that, Lagenda will be able to. That's how we foresee that Lagenda will be able to continue to grow their revenue consistently by sacrificing some of the margins in these joint venture projects. Next slide. And with all that said, we have a buy rating on Lagenda with a target price of 1.54 ringgit, which is based on the mean forward PE of 5.36 times of its 2023 estimated earning per share of 39 cents, which we have already taken into consideration the potential earnings that they can get from its planned launches of 2023. And with that, I end my part and pass back to Farhana. Thank you.
Okay, thank you, Kajan. So just a quick one for me. So essentially just now I already briefly shows the technical barbell strategy that we have. Then probably last one that I would probably mention is going to be on our in-house ETF coverage that we have at the moment. So we do have buy rating on a few of the ETF, essentially on the Asian market, China, and also Malaysia momentum as well. Even for gold ETF also, we do have a buy rating at the moment. So yeah, I think let me go through. Yeah, that's all from both of us. So Roshan, I pass back the floor to you.
Yeah, brilliant. Okay, so thank you Farhana and Kejun for the insightful presentation. Now we've come to the Q&A session. Farhana and Kejun, take it away.
Yeah, some of the Q&A I already answered directly by typing into the Q&A, but then there are a few still open, so I'll probably take the first one, then afterward Kejun would take those related to the construction and property sector. So the first one is, which company will benefit from China opening? So at the moment, unfortunately, we don't really have a in-house view when it comes to which company per se, but then when it comes to sectors, right, we do know that the tourism related sector would definitely benefiting from the China reopening stories essentially. But then at the same time, we do note that recently Anwar just came back from China after he managed to close in an FDI close to 170 billion. So that would actually bring on more more positive sentiment when it comes to Malaysia market and also to Malaysia economy essentially. But then, however, when it comes to the impact, it seems to be more focused towards the automotive segment and also towards the electronics, the machinery, and also E&E sectors like at the moment. So yeah. Then the next question is on EcoWorld. Kejun, any comments?
Okay, I believe at the current moment, I don't have any coverage on EcoWorld, so I cannot give comment on it yet. I have to build a fundamental coverage on it first. I'm sorry that I couldn't help you. Yeah.
Okay. Next one, the Gamuda earnings question.
Okay. Can you jump back to the financial summary slides for Gamuda? Yeah. Okay. So these are the numbers that I have forecasted for Gamuda's earnings for 2023 and 2024. And I believe all the growth would come in 2024, where they will, as the acquisition of the additional construction arm will be completed by June or July this year. And for Gamuda, their financial year end is at July. So for all these earnings from the Australia side to kick in, it would be in 2024. And for its dividend policy, I believe it's quite consistent at 12 cents per share in the past even in the past 10 years. And yeah, that's it. And also there's a question on UEM Sunrise, and at the current moment, I don't have coverage on UEM Sunrise yet. So I believe I cannot comment on it yet to give you an insightful answer. Okay, for the question on per square feet growth in Malaysia, say for the past 10 years, it really varies, depends on the location of where you're talking about. For Malaysia as a whole, is around 4 to 5%, I believe. And then if you talk about all the Klang Valley area, it's slightly on the higher end. And then is there increase in price for land acquiring in recent years? Definitely. For all this land acquisition price, it definitely go in tandem with the land per square feet price of all this land according to the years of growth. And for Lagenda itself, all of the projects are mainly in rural areas, and they actually get quite a good deal for all their land. So which is why they're able to achieve such a good return from all these projects, as you can see. And then like for you have to go back off. What is the competition for both Gamuda and Lagenda? So for Gamuda, competition definitely would be the Chinese contractors that are in, that always engage in price war, where they just dump all the margins and just engage in all these projects. And Gamuda has been trying to avoid direct conflict with them by going into certain regions that the China contractors are not that strong in. As you can see from the regions that Gamuda has been doing their projects, you can roughly have a sense why they don't have a strong China presence there. And then for Lagenda, main competitor, I believe at the moment there's no direct competitor for Lagenda, because for Lagenda they are solely focused in the affordable housing side, and all the other housing developers, they have slight exposure in affordable housing, but not as focused as Lagenda. They are fully focused in all this, and they have great economies of scale from resulting from all the focus that they put in, and using the same design and same layout for all the projects. And yeah, I believe I answered the questions for me, and the remaining questions would be for you.
Okay. So the next question is, do you foresee any hike in sin taxes for the upcoming budget for this year? So I'm assuming it's going to be budget for 2024. So it's still a bit early to talk about this. But then since the last two budgets, essentially it does the budget 2023 and also the retabling of budget was seen as an election budget, right? So essentially, there is no mention of hike on sin taxes. But then for the next budget, there is quite a good chance that there may be a hike. I believe that there may be a good chance that there's going to be a hike on sin taxes because there's not going to be a election anytime soon after the budgets, like essentially. So that's my personal view on that. Then the next one is why is ringgit is on steady decline even when oil prices have shot up to $80 per barrel. So when it comes to US, the oil prices the oil prices, right, essentially that jumped to $80 because of the surprise cut by the OPEC plus over the weekends, right? But then I think that when it comes to relationship to the ringgit, it's more of the fact that US dollar continue to strengthen despite the oil price has jumped essentially. So even for last night, essentially when it comes to the US market, it does come as a surprise even to us that it reacted positively to the oil price increase, because essentially market is viewing this situation as a situation where even though there's going to be inflationary pressure coming off from the oil price raising due to the OPEC production cut, but then at the same time, because of the whole banking turmoil that was happened recently, there is quite unlikely chances that Fed will continue to be very aggressive when it comes to their fight against inflation. So that's why when it comes to the probability of the rate hike for that next meeting, it's still about 50-50 when it comes to whether Fed will continue to maintain their rate at the moment, or it's going to be increased by 25 bips. So that's why US dollar is actually holding firm on that belief essentially. So the next question is Agenda view. KJ.
I'm sorry, I don't have coverage on Agenda, and also there's also a question on SP City and M Smelting as well. Currently, I don't have coverage on these companies, so I believe I should not give any advice on it yet. So, and now I'll jump back to a question on Lagenda. Would you know exactly? Okay, the question on the accessibility of Legenda's Thong ships. So, for the current projects that they already have, it would be at Perak and also Kedah. Of course, these states don't have like all this convenient public transport like the Klang Valley. So that's the downside of all these current projects. It essentially mean that the house owners really need a car for them to access to the town, which is located around 20 or 30 minutes away. And then yeah, I think that's the question for me.
The next question is, I'm not sure what it's referring to, because essentially it says last year oil price dropped to 0, but ringgit was stronger than it is today, which I'm not sure. I'm not sure which period it's referring to, but then last year ringgit was stronger because essentially when it comes to the whole because if we look at it last year, US dollar is essentially getting weaker due to the raising interest rate hike that Fed was employing essentially. So it's more of a relationship to US dollar rather than to oil prices. Next is a question on public bank view on public bank CIMB and Malaysia Maybank essentially. So unfortunately, we don't have a banking analyst at the moment, so we don't have any view on any of the counters. So next is, what is your view on the recent US-European banking issue to the global market and also to Malaysian banking system? Okay, so to a certain degree, when it comes to the Credit Suisse situations, right? Credit Suisse has already been on and off in trouble all the way back from 2015. So to a certain degree, we do know that whenever there's some sort of like any hiccups in the banking sector or even in the financial markets, right, Credit Suisse would sort of like pop up as one of the banks would definitely be in trouble. So it's sort of like now it's finally succumbed to the whole pressures and it got buy out by the UBS essentially. But then when it comes to the main concern, essentially how the Credit Suisse being buy out by UBS essentially triggered the 81 the additional tier bond, which that actually that is actually the main culprit that caused the volatility when it comes to the bond market essentially. So on this view, when it comes to additional tier 1 bond issues by the bank, by the Malaysian bank, right, we don't see that is as would have an impact similar to what is happening in the European market, essentially, because at the end of the day, when it comes to Malaysia, our Bank Negara recently has already come out to say that the Malaysian bank 81 the AT1 bond issued by Malaysian bank are essentially ranked higher than the equity holdings in the case of resolution. So that's why the banks in Malaysia essentially do not purely rely on AT1 capital for capital, right? So if we look into the components of capital, more than 80% of our banking come in from equities and also from retained earnings. So it's very different than what's happening in the European market, or even in Credit Suisse situation, or even to a certain degree to what extent to what happening into the Silicon Valley and also to Silicon Valley Bank and also Signature Bank essentially. So that's why we think that what happened on the European bank issue essentially is still going to be very, very sort of like stays within the region, but then how the extent of it to impact to the Malaysia banking system is going to be minimal at the moment. So yeah. Then next question is, what is the latest on dialogue group? Unfortunately, we don't have coverage on dialogue group, so we don't have any comments on that. So how many hikes on OPR for Bank Negara to proceed this year? So far, market, I agree with sort of like market consensus as well. We do think that Bank Negara will most likely going to have another one rate hike of 25 bips, essentially. 25 bips. In view of the hot button issue of chicken and egg, what's your view on farming and plantation stocks? Okay, on this note, right, unfortunately, we don't have a consumer analyst at the moment. Our consumer analyst essentially has already left the company. So unfortunately, regretfully, I would say that we can't give any comments on this stocks essentially. So with the proposal of Johor state government to set up special financial zone in JB, assuming the proposal is implemented, what are the implementation? Yeah, sorry, unfortunately, I don't have any view on that at the moment, because essentially when it comes to a special financial zone in JB, it's still on a proposal phase. So even if there is any at the moment, we don't think that it's going to be significant. It would have any significant impact to the listed company in JB essentially. So any Malaysian company will be beneficiary of MNC outshoring their supply chain from China to other attractive manufacturing sites. Okay, when it comes to this, because essentially one of the big big success story that we have at the moment. The story is going to be on Anwar's success meeting in China, where he essentially bring back record 175 billion worth of foreign direct investment from China. So that's why the beneficiary, we would say that because it does translate to about 19 MOUs at the moment, although most of it is still on a very proposal phase, so we don't have any details on that yet. But then at the same time, during the visit of Anwar to China, essentially Maiji also come out saying that they has been actively participate in the blockchain technology in China as well. So that's why we do think that in general, quite a number of Malaysian companies would be beneficiary of the offshoring of the supply chain from China. So one of it, I think, was it Samdabi? Yeah, I forgot the company names, but then one of our auto segment, automakers company essentially is sort of like it's part of the proposal MOUs with China on the automated on the EV technology Valley Park on Tanjung Malim site essentially. So yeah. Next is food security government planning on agriculture shock. So essentially, when it comes to any talks of food security government plannings on government side, right, we think that it's still going to be beneficial for all the agriculture stock, especially on the on the agricultural stocks, essentially, because at the end of the day, when it comes to the whole situation of what happening in the Ukraine and Russia war situation, it does bring up most of the government attention to the food security, to the national food security situation, essentially. So that does boils well to the agricultural stock, but then at the same time, to what degree it would still be depend on case by case basis, I would say. Next one is, will TNB be a big player in EV infrastructure development? Well, this one, it depends, because at the end of the day, when it comes to EV infra developments, it does require a lot of electricity infrastructure to be deployed. But then at the same time, we do note that when it comes to EV, most of it is more of a space where the cars need to be parked and also being charged. And most of these spaces, right, is essentially more of like a parking spaces, or even on the what you call it, on the petrol pump station. So to a certain degree, TNP do play a big role in the whole EV infrastructure development, but then most of the hiccups, or even sort of like the bottleneck on the EV infrastructure development, is more of a location where all this EV would be available to be charged in Malaysia, essentially. So the supplier on the electricity will still come from TNB lah. So last question is, what is our view on palm oil and also tin prices? Yeah, I have to get back on back on you, because we do have a target price on technical target price on these two, but I can't remember it on top of my mind. So probably need to get either Roshan or Marina to get back to you on this. Yeah, so that's all the questions. So take it away, Roshan.
I'm right here. Awesome. Okay. Thanks again, Farhana and Kejun, for the presentation and interactive Q&A. We have now come to the end of the webinar today, and we would like to thank all of you for joining. For tomorrow, we will be sharing the outlook and stock picks for the emerging markets. This session is a roundtable panel discussion moderated by Paul Chu, Head of Research. Our speakers from Thailand, Chutikan Santi Metvirul and Adison Mungpanchon, will cover the Thailand market performance and stock picks. Our speaker from Turkey, Ali Akova, will also touch on the inflation in Turkey and how it has impacted different asset classes. Remember to mark your calendars. It's tomorrow from 1 p.m. to 2:30 p.m. For the session just now, we will be uploading the recording on PhillipCapital's Facebook page and YouTube channel. You may view the recording of the webinar on your own time. Also, we have many other interesting webinars going on almost every other day. You may view our full list of free webinars on our website. Do take your time to fill in the survey so we can improve your experience with us in the future. You may scan the QR code or copy the survey link posted on the chat tab. You may also join our investing communities to get free access to full research reports and discussion on technical analysis. Once again, thank you all for joining us, and we hope to see you tomorrow. Stay tuned, take care, and have a nice day.
Thank you.
Thank you.